just an example of MicroStrategy, it was a $1 billion business with 500 million cash. They started in August 11th, 2020, 4 years and a month. After they started, they have $16 billion of Bitcoin and like $4 or $5 billion of debt. Who has in the S&P 500 outperformed that name since that date? No one. I realized that everything in the world is trending to zero against Bitcoin on a longer time frame. BlackRock, right? Who have stacked 360,000 Bitcoin. They've stacked a MicroStrategy and a half in the span of 9 months or so. They've quite literally said, we want to help, pump Bitcoin to pay off the debt, right? Which is obviously a bit hyperbolic.
Dylan LeClair, hot off a trip to Japan. Back stateside. How you doing, sir? You look happy. You look refreshed.
I'm doing great. Yeah. Happy to be here. Happy to be back in the States, although I did have some fun over in the East. But yeah, feeling refreshed, excited for what's to come. Bullish.
Getting back in the saddle, right, as we're approaching $65,000.
Yeah, it's been a choppy six months, but good. I think I needed it. I was feeling a bit of FOMO on how things were looking in early March. Obviously up only is fun, but good time to stack and get prepared for what's to come.
Yeah, it's funny how, having been in this for 11 years, the cycles, particularly the psychological cycles around price, just repeat and repeat and repeat, or rhyme and rhyme and rhyme, however you want to say, because you had the summer of chop and consolidation, which is healthy. I think it was hit all-time highs before the halving, cool down for 6 months. It's good consolidation, a tighter spring to coil off of. And I guess with that, like, from your perspective, where do you think we are in this cycle heading into the end of Q3, entering Q4, post-halving? Election season, and it's definitely a different dynamic from a fundamental perspective this time around as it pertains to Bitcoin and the demand drivers and liquidity avenues that can come into the asset.
Yeah, I mean, I think in a long view, regardless of who wins, somewhat immaterial, for at least for Bitcoin's sake. I think the biggest thing on Trump this summer was, just the rhetoric alone sort of accelerates the timeline, shifts the Overton window, gets every nation state to look twice. Everybody's talked about that ad nauseum. But I think Trump, obviously there's a whole bunch of catalysts, 6 weeks out from the election. He would obviously be good for it, but I don't think, if Kamala is in office, it's a similar story, just a bit of a different flavor. So yeah, I'm feeling super bullish. The fiscal situation is obviously irreparable. Both sides are going to run historic deficits in peacetime, hopefully peacetime, but that's where we are right now, and they're still doing it. So. Yeah, I mean, I think there's just this realization, it's the stuff, it's a bit surreal to see the stuff that, the crazy conspiracy theorist Bitcoiner side of the world has been saying for years, being said on a daily basis from, the highwigs of finance, like BlackRock, right? Who have stacked like 360,000 Bitcoin. They've stacked a MicroStrategy and a half in the span of 9 months or so. And obviously it's not one entity, it's other people's funds, but this Bitcoin has reached a point of not no return. I think, maybe you could argue, and I would say you could really argue that was a long time ago, the threshold or point of no return. But, there's a lot of debate in circles of, well, would a Harris administration be bad for crypto, or, what would Trump mean? And I think either way, Bitcoin has cleared away, distinguished itself. It's obviously above any of that, SEC security talk and whatnot. So I think either way, right, they realize that, like, if a Trump wins, it's obviously much more stated in the policy. They're talking about the Triton dilemma and the dollar strength and re-onshoring and they've quite literally said, we want to help, pump Bitcoin to pay off the debt, right, which is obviously a bit hyperbolic, but that sort of speaks about their broader policy ambitions and what Bitcoin can serve as sort of an escape valve. And then for the Harris administration, I think Bitcoin as this this non-sovereign avenue for capital flight, for a version from financial repression, and deficit spending in a different way. It's sort of inevitable, and the story is just very strong, and it's a blessing we're still at prices we saw 3 years ago.
Yeah, no, I think you touched on it perfectly in regards to the upcoming presidential election and the two paths we can go down on the fiscal side. Obviously, Trump more favorable from a tax perspective, maybe not so much from tariffs perspective. Kamala Harris talking about unrealized cap gains tax, raising the actual cap gains tax, and doing some inflationary policy, making some inflationary policy decisions, particularly giving people $25,000 to buy a house, small business or startup tax credits. That's on the fiscal side, but regardless of who gets in, what path they decide to take, they still have to deal with the monetary sovereign debt crisis that is materializing globally right now. And obviously you were in Tokyo when it happened, but last week we had Jerome Powell lower rates by 50 bips, a bit more than people were expecting. In your perspective, what does that 50 bit rate cut signal to you?
I mean, I think one of the interesting things is that the long end has risen since he's done that, right? So I think if you look at the past rate cut cycles, that first rate cut is the first sign of weakness. It's been talked about for a while. The recession bear case, of which I was talking about in 22, 23. Admittedly, like every bear. There's been people doomers that have said, this is the GFC since the GFC every year. And those people have been, perma wrong and made no money. And so the bear case and the recession case has been, I think just because of the oddity of this cycle was pushed back, all the excess cash and stimulus and the fact that spot inflation, if you will, was 8-9% in 22 and was even on the disinflationary period in 23 and throughout 24 the kind of the monetary policy tightness, if you will, wasn't really felt because real interest rates, if you will, weren't all that restrictive, and so now I don't think they get their 2% inflation, and it definitely doesn't stay there, especially with the next two administrations. But that 50 bips cut, I think there's a bit of structural weakness. First kind of cracks in the labor market, and the middle and lower class are starting to feel a pinch. I don't think they let they, as in either administration, let it get too hairy. But I think they've, because of how slow the Fed was in the response to the inflationary wave. I think by intent. I think they wanted to kind of let inflation rip and erode some of the debt. And because of, political reasons and because of the size of just the deficits that were run, that didn't happen, despite the once in a 50-year inflation wave, debt to GDP didn't meaningfully go any lower. They responded late, raised, had the fastest rate hike cycle in history. And I think, probably held it a bit too long to try to stamp out that sort of inflationary impulse out of the consumer and out of the U.S. markets, global markets. And so now they're, not chasing, right? But I think there's a good chance that, what's the market pricing in? I haven't checked the last week or so, but like another 100 basis points of cuts, or maybe 50 through year end, and then some more in 25, right? So, right, this is indicative of where we are. We can't really handle meaningfully restrictive policy for a long time, especially at these debt levels. So, a 50 basis point cut, and then we have, sort of a weak or a strong labor print that caught people off surprise. And now China is just dumping stimulus into the system. And, in a global liquidity perspective, it's all interconnected, right? So that kind of spills into other markets, maybe to the angst of Xi Jinping. But it's an interesting spot. Gold hitting new all-time highs every day. These are definitely warning signs.
This episode of TFTC was also brought to you by Bitkey. Bitkey is Bitcoin made easy to use and hard to lose. If you're a hardcore Bitcoiner out there with friends and family members who have not gotten their Bitcoin off exchanges because they're worried about the complexity of hardware wallets, seed phrase backups, this is why Bitkey exists. Bitkey is collaborative custody. You have a ergonomic hardware device with biometric confirmation. You have the Bitkey app with a key in it, and then block holds another key in the server. This doesn't come with any seed phrase backups that people have to secure. You have social backup. It's a beautiful solution. If you're worried about the people in your life that aren't as advanced as you in terms of Bitcoin hardware and being able to set that up and secure it, Bitkey is a great first step. So tell them to get a Bitkey. Go to bitkey.world. Use the code TFTC20 at checkout, and they'll get 20% off their first Bitkey.
Yeah, China this week, I mean, big splash coming out with extremely pumping a lot of liquidity into the market. And that was, China's always been perplexing to me. You never know what to believe in terms of what's coming out of China. It seems like they have been going through a massive real estate crisis there, which a lot of the Chinese citizens' savings is tied up in. And you have the Kyle Bass side of the equation, which is China's going down, where you got to short the Hong Kong dollar and the yuan, and then you have the other side of the story, or people putting out the other side of the story, which is like, people don't understand China, they're fine. But then you see something like this week where they essentially came out, lowered rates, opened up the PBOC window to hedge funds to buy equities. They've made it illegal to short equities within the country. And so if you're looking at it as an outside observer, just looking at those policy decisions, it's like, it doesn't seem like everything's all right there. And with that in mind, if China is actually going into a looser monetary policy, injecting liquidity into the system, do you think a lot of that will flow into Bitcoin, or will they be successful in sort of cattle herding that into their equities markets, their real estate markets, whatever?
Yeah, I mean, I think definitely, a certain extent of it will. China's sort of, it's kind of this black box. It's a bit opaque. I don't pretend to, be an expert in Chinese affairs, but I think that the doomers of China are a bit overstated, and I also think the people that are, maybe like, the Dahlias of the world that say China is the next world reserve currency and great power and all of that. China has, as you just said, all a bunch of their own problems, right? From the debt levels and the massive real estate bubble that's definitively unwinding. The demographics. So I do think China obviously is a great power, and from a geopolitical perspective is definitely the number one adversary to the U.S. from a geopolitical perspective. But at the same time, as an investor, I don't think you can really trust much from China, right? I don't think, similar to like in Russia, right, where you could be looking at the PE multiple of Russian equities and trying to make some fundamental case, and then all of a sudden it's a zero, it's a donut. I think Bill Miller said that earlier today, or maybe the past couple of days, right, in terms of investing in the Chinese markets. So, I mean, from the stimulus perspective, right, or from a liquidity flows, could be a good buy the dip opportunity. But in terms of a long-term sort of, capital play, I wouldn't say, I wouldn't want to touch anywhere near China in terms of, protecting or storing my wealth. And I think a lot of people, a lot of Chinese are also thinking the same thing, right? It's like you want to get money out of the system. You want to get money into Western markets or Japan or Bitcoin or really anything outside of the hands of the CCP. Yeah,
I think that's a great example of liquidity flows that are somewhat unknown as it pertains to Bitcoin. And this is why I wanted to bring you on, because I think, as I alluded to earlier, over the last year, or we could say 4 years since MicroStrategy launched their Bitcoin treasury strategy, you're beginning to see a trend develop, particularly in public equity markets, of companies leveraging debt and equity markets to raise capital to buy Bitcoin, to put it on the balance sheet. Obviously, you're involved with MetaPlanet in Japan, which has begun the strategy earlier this year and had massive success. And I think this is an example of a demand driver for Bitcoin that is more predictable and could be a consistent demand driver moving forward. And so since you're on the front lines of this particular treasury management strategy and public equities as it pertains to Bitcoin, like, how do you see this playing out? How has it played out up to this point, and how do you see it playing out moving forward? Do you think this trend is going to continue to accelerate as it has? Obviously, pre-recording, you mentioned the memo that we released at Cathedra a couple of weeks ago, basically signaling a similar intention. And to me, it just makes sense, particularly if the Fed's cutting rates. You have this geopolitical uncertainty growing around the world. Like, if you're a publicly traded company with access to these capital markets, you should be getting as much exposure to Bitcoin as possible.
Yep, 100%. I think, there's a few data points in Cathedra's note that were particularly interesting to me. It was that one of them was that, out of 10 public miners, I think 9 of them have, and I forget the time frame, but the last few years have, despite, aggregate Bitcoin increasing and all the like, the Bitcoin per share count is lower, right? Mining is a brutal business, obviously, and anybody that's in the field, you understand that. You have to understand that, otherwise, you're going to get slaughtered. The difficulty adjustment is one of the most brutally competitive, if not the most brutally competitive, forcing functions in all of industry, maybe ever. And so I think, when I think of MicroStrategy, and you've watched the story unfold for 4 years, there's a software company that's had 10 years of accumulated earnings. They had $500 million cash, and were looking for a diversifier. Sought out all of the commodities and equity securities and bonds, and decided to buy Bitcoin as a hedge. That strategy hedge turned out into an all-out blitz game plan of equity dilution, issuing debt, buying more Bitcoin. And I think the thing that's not very well understood is the volatility side of the story. Bitcoin's volatility is often, it's from the naysayers, the critics, the Wall Street types has been, the volatility is the number one reason to avoid it. And that's what it's sold, right? It's too risky. But from the corporate treasury side, if you're familiar and you've watched MicroStrategy for these 3-4 years, really like post, like 6 months after their start, when they started issuing converts, they issued a 0% convertible note in 2021. And that was when I first went, oh, okay, wow, like this, after digging into the mechanics, it's a bit new to that sort of world for me, and realizing, that embedded call option that the convertible note security had, the fact that they could issue it at 0, stack Bitcoin 6-7 years down the line, and repay it. And they would, if Bitcoin rose, say, 40% or more, particularly their common stock did, then they wouldn't even repay it in Bitcoin. They would repay it in shares that they issued from their treasury. And so this strategy, what's not understood is this strategy is accretive if you're trading one-to-one price to book. If you have $1 billion of Bitcoin on the balance sheet and your market cap is $1 billion and you have no enterprise value or no premium to your Bitcoin holdings, that strategy is, by definition, when that conversion premium is higher than the current price, is accretive on a Bitcoin per share basis. Never mind if you have any sort of premium on your stock or enterprise value. So this idea of monetizing volatility, of Bitcoin's volatility, can not only be something to embrace, but is something to be leveraged. You can leverage your common stock, and quite literally leverage the Bitcoin on your balance sheet, crank the volatility, and be able to access capital markets, basically the biggest capital market in the world, that has zero access to Bitcoin. Right, the thing that someone like myself didn't understand 4 years ago, as I was buying Bitcoin on Cash App, was that the biggest pools of capital in the world can't access Bitcoin, the fixed income markets. And never mind that, even equity markets, right? You're kind of siloed by your investment mandate or whatever it may be, to the point where you can't download an app and stack sats like an individual can. And obviously, that we got Bitcoin got this far through the first 10 years, 15 years with basically individuals leading the charge, right? And so this year in 24, well, really MicroStrategy in 2020, but in 2024, with kind of the institutional, green light from the ETFs, I think the idea of the corporate treasury strategy, from a dabbling perspective, like, put 5 to 10% of your assets into it, which we saw through the last 4 years, but also, from the okay, I realize that everything in the world is trending to zero against Bitcoin on a longer time frame. I have common stock equity that I can let's informally say print. Why wouldn't I dilute to increase my Bitcoin per share? And so that's again, this is a concept that is completely antithetical to everything that you've ever learned in corporate finance or that you will learn. Dilution is something to be avoided at all costs. A majority of executives and high-paid, high-flying CEOs and CFOs decide to borrow as much as they can to buy back their stock. The opposite of dilution. And so what MicroStrategy did and the Bitcoin playbook has showed is it completely flips it on its head. And so I think that, leveraging Bitcoin's volatility in particular to stack is one of the most interesting concepts for me, because I think it's just scratching the surface on this whole corporate framework. And I think there's a good chance, 10, 20 years down the line that, there's not just case studies about this, but it's replicated tens, hundreds of times over.
No, you honed in on something really important there, which is the inverse of the playbook in public equity markets as it's been deployed, particularly over the last 2 decades, which is these companies have a lot of cash. They want to increase their share price. And so they've just been doing buybacks, taking more shares off the market. And this, I think that's what trips a lot of people up who are familiar with the buyback strategy to increase your share price, is the dilutive nature of either purely raising equity or doing these converts, and adding more shares. I think it's counterintuitive to most investors out there. It's like, how could you actually be accretive if you're issuing more shares? And I think that is the unlock that Michael Saylor and MicroStrategy have brought to the market, and what you are doing at MetaPlanet, what we're doing at Cathedra, and many others are starting to do is realizing that there's a new way to do it if you use Bitcoin and take advantage of the volatility the correct way. And on that note, like, how big is the arbitrage opportunity? Like how, or another way to put it, like, how much of an advantage do the first movers of this strategy have against the rest of the market moving forward, in your opinion?
Yeah, I mean, just an example of MicroStrategy, it was a $1 billion business with 500 million cash. 4 years later, like, they started in August 11th, 2020. It's 4 years and a month after they started. They have $16 billion of Bitcoin and like $4 or $5 billion of debt. At a blended interest rate of 80 basis points, termed out, 3-4 years on average. Who has that borrow rate in corporate finance? No one. And who has in the S&P 500 outperformed that name since that date? No one. 500 S&P 500 companies have underperformed this crazy madman strategy that's super volatile and risky, right? And again, the volatility paradoxically is the reason it's successful. It's not that it's just luck, and people will attribute it to luck. The market went up, right? I mean, MicroStrategy would have gone up, but because they bought Bitcoin, and the software business is producing 20, 50 million bucks a year, whatever the figures are. But going on the offensive, and this is the when you talk about that flip or think about that flip, right? It's a lot of this stuff, whether it's convertible notes or at the market equity facilities, or in the example of MetaPlanet, doing a stock acquisition rights issue, a free rights issue. at a discount to the current market price. These are things that are traditionally very, very defensive, right? It's we have to consolidate debt, or we're going to dilute our shareholders because we need to pay down this senior bond, so we're going to do a convert. And you know, the stock on the announcement of this falls 10% because you know, people want to own the business. They don't want to get diluted out, right? In the case of the Bitcoin strategy, you know, particularly if you know, it's through the course of doing this, you've communicated it to your shareholders. You've said, you know, this is what we're going to do and this is the goal. The shareholders want one thing. They want Bitcoin. And so the creative dilution, you know, sort of offensive, not defensive, offensive, convertible notes as an offensive tool, rights issue as an offensive tool. This is the flip. And I think that's the reason you've seen, you know, this MicroStrategy story. Never mind the percentage share increase. The more impressive thing is the market cap. The market cap going from 1.5 billion to, you know, 30 billion and change, fully diluted, right? That's like even a crazier story. And so, you know, I still think, you know, I was a bit naive in you know, 2020 and 2021 saying, you know, there's going to be 100 companies that do this, you know, this year, next year, you know, kind of not understanding how slow and methodical and, you know, almost bureaucratic many of the world's boards move in the, you know, the kind of the equity world. But I think there's, you know, an increasing amount, like Eric Semler is a great example, right? He's just a really smart guy, has, you know, kind of been in the financial world, understands the mechanics of things. Semler Scientific is a medical device manufacturer, right? And they're like, yeah, well, we're going to stack Bitcoin, and they have over 1,000 Bitcoin, right? And they've, you know, had the S1 and have a shelf offering and ATM and all of this, right? So they're early in the kind of the playbook here as well. So yeah, I mean, I think that every market is going to, you know, going to have names and have equities that figure this out. Some will be far more aggressive than others by the very nature of the business, right? So I mean, MetaPlanet, and we've been open about this, was, you know, a commercial real estate entity that completely restructured, a forcible restructure due to COVID and you know, the government basically shutting everything down. And small businesses got help, but if you're a public equity, you were kind of left out to dry. You were too big. And so the kind of the small micro cap, you know, equities were kind of left to hung out to dry. So they, you know, sold 29 of the 30 hotels and, you know, had a bunch of tax losses and were looking for the next strategy. And as it turns out, Tokyo had, you know, 0 Bitcoin proxies and an unfavorable tax rate for crypto at 55% or up to 55% relative to 20% for listed securities. So it just made sense from that angle to go, you know, basically to go full 120% pedal to the metal. But, you know, if you're a conglomerate business, right, it's obviously, you're not going to all of a sudden pivot to say we will dilute our common stock to infinity to stack Bitcoin. I think it's a slower transition, but that's okay. You know, we don't need 100 Michael Saylors, but, you know, I think there will eventually be 1,000 you know, squares or you know, just companies with a business model that realize that they want to DCA a bit every day. And so I think that's where we're headed. But I do think that the bigger this story becomes, the more and more it will just become blatantly obvious. And, you know, just due to the inherent volatility and uncertainty and free market kind of nature of Bitcoin, the cost of capital for entities that are executing this strategy will be the lowest in the world.
Yeah. And to that point, like, in your mind, how important is it to have a cash flowing operating business below this strategy? Or what does having an operating cash flowing business allow you to do or not allow you to do in terms of trying to deploy this strategy?
I mean, yeah, it's obviously, I mean, that's, you know, pretty basic, you know, equity market valuation sort of stuff. You know, never mind the multiple that comes with that, right? Which is a key, that enterprise value, that, you know, intrinsic value, if you will, is key to being able to do a lot of these things, like dilution, and just, you know, just from a stacking sats, you know, framework, right? So I think that's very key. But at the same time, I think that, if you looked at like the Russell 2000 or you looked at the NASDAQ, what amount of the Russell or even just the total U.S. equity market has a robust cash flowing business? How much of the NASDAQ is like 2021 tech darlings that were in the ARK Invest portfolio that still have a $2 to $5 billion market cap, based on the value of the value, the intangibles of their software or the moat or the network effect, right? And so like could an Uber or a Roku or a Zoom or could a DoorDash do this? Yeah, I mean, absolutely. Are these conglomerate cash flow titans? No, they're not. And so I think that's while it is of utmost importance on a long time frame. There's at this point, especially with all the AI stuff going on right now, there's such a intangible, like I think that the amount of intangible assets as a percent of the market cap, I saw this 6 months ago, is the highest it's ever been. And it makes sense, right? Because we're in this kind of like network internet age, digital age. Maybe someone like Buffett would say it's all fluff, and that's fair enough. But to that end, if that's the case, and the majority of your enterprise value is kind of this intangible network effect that investors are valuing, it's a rational decision to dilute, quote unquote dilute, and get some of that treasury into cold hard Bitcoin. That's not going anywhere. That's not going to fade because of a competing network effect or a dwindling moat, right?
Yep. And now that the strategy has been validated, that's the other thing. Like MicroStrategy has done it for a full cycle. I think the thought that 100 companies would do it right away, I think I had the same thought. I was like, oh, as soon as they're doing this, like somebody's gonna be like, oh, we should do it too. But I think you needed that 4 years, 3.5, 4 years of validation before you see more people getting comfortable with the strategy, just generally. And we're at that point, and it's obvious that more companies are becoming comfortable with this and deploying it. And with that in mind, like, what does this mean for like the price of Bitcoin moving forward? Because you have these new entities that are coming and taking supply off the market and holding it for the long term, and they have access to capital markets to keep rinsing and repeating this until it's completely arbed out. And I don't think that time is anywhere near today. And that completely changes the dynamic of demand drivers for Bitcoin. And then you couple in the ETFs with this, sovereign nations like the Kingdom of Bhutan with this, like what is the landscape of like demand drivers for Bitcoin, and how does that affect price moving forward and liquidity moving forward, liquidity of like the float of Bitcoin on the market, in your opinion?
Yeah, I think at this point it's the ETFs and kind of Wall Street and that those investor types and endowments and whatnot are a bigger driver than the corporates. But to that end, the compared to an ETF, compared to just spot Bitcoin that like a Mass Mutual would buy, which made waves in 2020, and these guys have massive amounts of assets under management and cash. Wisconsin pension, right? Like these guys have unlimited cash. But on a longer time frame, right? Kind of going back to the point I made 5 minutes ago, the elephant in the room is, and we've talked about this back and forth. You've had a million guests on your show that bring amazing insight, that come and talk about how bloated and screwed these fixed income markets are. And so the vampire attack on fixed income, from a pure play expression, is these corporate convertible notes that are proxies for Bitcoin. There's nothing actually like it. That's why every single round MicroStrategy does is oversubscribed, every single one, because there is I think a lot of these investors, these bond investors, are looking. They're just plugging in the Black and Scholes model. They're saying, okay, the volatility is 100, 120, and it's 40% out of the money for 5 years, and what's the value of this? It's just, they're just plugging in inputs and getting an output. But to a certain extent are probably have a burner on Bitcoin Twitter and are saying, okay, well, there's not anything else in the world I can get, I can get exposure to, right? So I'll take down some convertible notes. Like, who would buy this 0% bond? Are they stupid? And that's what even I said that in 2020. I was like, or 2021, like these morons, And as it turns out, the MicroStrategy zero coupon convertible note was up 300% from par, while the U.S. Treasury market bled 30-40%. Right, like it was up 300% from par, not from like depressed bankruptcy values, from the $100 par value. It was up 300, 250, 300%, and they redeemed it as it was in the money. So like that sort of asymmetry doesn't exist in fixed income. Fixed income investors are happy to clip coupons, and they just don't want to lose money. So if Bitcoin is to become $100 trillion. You're going to see spot ETF flows. You're going to see individual investors. You're going to see private treasuries. You're also going to see massive. Speculative attack doesn't sound so warming and welcoming, but maybe currency arbitrage, long dated currency arbitrage. With this volatility sprinkled in. From convertible notes or, many other things a corporate treasury can do. And so that's, that can't be priced in because, lending itself creates fiat money supply, right? This is how currency gets lent into existence. So if you have not one corporate treasurer doing this, but you have, if you have 50 doing this with real size, which isn't where we are. I think, the only other company that's done a big convert to a similar extent as Marathon, and they obviously have their mining business, and that was cool to see. And they have quite a stack. I think they have 26,000 Bitcoin these days. But I think again the mining business is a bit challenging. So I think once you see a wave of real corporates around the world, through this cycle, start to take on some pretty meaningful size. Then that's where the story gets interesting.
Well, that's why I think the MetaPlanet story is very interesting. It's because of how quickly you guys have been able to scale this strategy up over the course of 6 to 8 months. So let's paint the picture for anybody out there who's thinking about deploying this strategy and just walk through how you guys have scaled this since March of this year. March or April of this year?
April. Well, yeah. So it was basically a decision. I was talking to the team a bit early on, but didn't join until the beginning of May. But in April 8th, they announced the Bitcoin treasury pivot. It's kind of a brief reason why: weakening yen, macro situation, Bitcoin as a store of value. Kind of the whole 9 yards. Bought the first 100 Bitcoin. The strategy is still very small, but I think we're going to scale it pretty quickly. Bought the first 100 Bitcoin on the exercise of outstanding warrants, kind of stock acquisition rights that were transferred to a strategic set of investors. The next 100 or so Bitcoin was debt. Previously, no debt against the company, was 50 basis point debt against the hotel, which they have, which is kind of the, I guess, incumbent core business. And there was some more exercised warrants to stack again. And then I think the most interesting thing was on August 6th, the stock ran a lot. It was trending kind of on Yahoo Finance Japan, which is like the kind of the stock twits Reddit. It's like the kind of the one of the larger stock forums for Japan. It was trending as the number one stock on Yahoo Finance Japan for a few weeks, and got a bit extended. And on August 6th, the same day as coincidentally on the same day as the yen implosion, we announced a 10 billion yen, so like $70 million stock acquisition rights issue. Meaning the stock was at, I think, like 650 yen. And we announced that we were and this isn't a technical corporate speak, but I think this is the most apt analogy, that we were basically airdropping a free in the money call option to every shareholder. So it was August 6th. We said through any shareholder on the record date of September 5th will have the opportunity to buy shares at $5.55 from September 5th through October 15th. So basically, a free in the money 2.5 month call option. And the stock on the announcement of 100% dilution at a discount, the efficient market hypothesis would say the stock would have gapped between the current market price and where that rights issue price was to counter the dilution. What actually happened was the 2 days following the announcement. This is August 6th, so the VIX was 66 and Bitcoin went to 49K. The next 2 days of trading there was no trading. It was limit up pre-market for the entire day, and the stock 3x'd, and it's since fallen a bit, but it's doubled from the time of announcement. So we're now at 1,000 yen for the past couple of weeks, and the rights exercise period is thoroughly underway. So I think if and not for certain, but it looks like coming out on the other side of this issue. We'll have 12 billion yen of Bitcoin or so in 6 months from starting at a 4 billion yen market cap. And so it's the early stages. I think we'll hopefully have four-digit Bitcoin, get over 1,000 Bitcoin on the other side of this, and then that we have a nice equity base to work from and can keep the strategy going. So. Again, that whole rights issue, dilution at a discount, like this is all counter to everything that you would learn. But, we were kind of thinking about, the reflexivity of this. And so the day after the rights issue, we announced there was, it was a 6 month billion yen loan to buy more Bitcoin. And the reasoning is, among other things, that we wanted to crank the volatility further. Of when we're just thinking about our balance sheet volatility and common stock volatility, because the more the vol, the more valuable theoretically those 3 month options become on the most volatile stock in Japan. And so I think it's worked well so far. Early days and very small. So the MicroStrategy comparisons are humbling, but I would say that it's definitely not the same scale of a business or treasury, obviously, but the playbook is similar, and it's that we openly stated that the day I joined, 2 days after, we published a 2-page white paper in Japan through the Tokyo Stock Exchange, and basically in it said the Bank of Japan and the Japanese government have basically backed themselves into a corner. There's no way out except massive debasement. As such, we've adopted this strategy. This isn't a digital asset strategy. It's not a crypto strategy. It's a Bitcoin strategy. Here are the reasons why Bitcoin is different. And how do we plan to utilize this information? Well, we're going to issue stock as much as we can to buy Bitcoin and issue debt as much as we can to buy Bitcoin. And I think in the Japanese conservative corporate culture, it was a bit of a shock and awe to come out publish it in English and Japanese, like basically through the equivalent of like an SEC disclosure and come out and say these things. But, it's obvious that the market has responded positively. And, for a company that was, sort of dead in the water, the last, month or so of trading, we're $20 million a day of trading for the stock. So, it's revitalized, and the number of shareholders have I think 20x or 15x in the span of 6 months. So it's exciting. I think Japan it's a perfect market, and the fact that there is no Bitcoin exposure anywhere in Tokyo is sort of supercharged our story.
And how does this strategy evolve as the price of Bitcoin goes up? Like, is it like if we're looking forward, and like how do you or how are you approaching like strategically accessing these capital markets as the price of Bitcoin, we get 1x above the previous all-time high to 3x? Do you sort of scale back, and how important is the timing of the deployment, the raising and the deployment of capital?
I mean, it's very important. I think, you know, it's you're playing two markets. You're playing, you know, as a corporate treasurer, you're playing not only the Bitcoin market, but you're also playing, you know, there's this arb of the value of your enterprise versus, you know, the amount of Bitcoin you hold. And so, you know, there's a certain point where, like, if you were trading under the value of your Bitcoin holdings, you wouldn't necessarily want to dilute to buy Bitcoin, because that's not accretive on a Bitcoin per share basis. But there's obviously, you know, in the opposite sense. For instance, like in 2023, MicroStrategy wasn't trading really. There wasn't a meaningful premium to the amount of Bitcoin they held versus the premium to their market cap, right? As it is today at like a 2x. It wasn't a 2x in 23. It was like closer to 1x. But through 2023, you know, through 7 months of chop around 30,000, MicroStrategy hit the tape 3, 4, 5 times, maybe. I think maybe 3 or 4. With, you know, $500 million clips of at the market equity facility dilution. And so even at a 1-to-1 ratio to Bitcoin, market cap to Bitcoin, you know, no premium to NAV, as some people say, you, like, from a solvency basis, you know, your solvency ratios are improving. If you have any debt, you know, against your balance sheet and you're diluting at 1-to-1, never mind it being, you know, accretive on a Bitcoin per share basis, but you're becoming more well capitalized, right? So I think we're thinking about this as we want to own as much Bitcoin as we can. If the price goes parabolic to 6 figures or high 6 figures in a short amount of time, you know, there's a time and a place for debt. There's a time and a place for everything, but we'll, you know, kind of alter our framework. But I think that, you know, the most interesting thing is you can, you know, basically short sell your own stock volatility through warrants, through at the money warrants, through converts, through, you know, equity plus warrant structures, right? There's all sorts of things you can do. Never mind the straight dilution. And I think, you know, also, well, I wouldn't say this is necessarily an adoption strategy for everybody. For MetaPlanet, in this subscription rights issue, the stock exchange kept coming back to us and saying, okay, well, you're raising all this money to buy Bitcoin. How does Bitcoin improve the prospect of your earnings? Why is Bitcoin good for your business? Can you please explain this? And so it was a great opportunity for us to, you know, very transparently in a 30-page disclosure explain all the things that we can do with Bitcoin. We can use it as collateral. You know, we could, in theory, use it for a mechanism for trade. We could, in theory, you know, go out in you know, the kind of early nascent derivative markets. And, you know, if Bitcoin is trading at a 30-40% spread in futures, you know, we could kind of do some sort of long spot short futures and capture a 30-40% premium if we thought the market was a bit frothy, right? And obviously there's counterparty risk there. That's not the core of any strategy, is punting derivatives around. But in the concept of Bitcoin's volatility and Bitcoin's kind of monetization, and all the leverage that gets baked into the later phases of a bull market, this is all something as a treasury that we would, you know, we would be looking at, right? So, you know, if you're thinking about deploying capital, you could, especially if it was the market was frothy, you could, you know, buy Bitcoin and sell, you know, with maybe 10% of your capital, you could sell, you know, far out of the money call options. And if your treasury goes up, if the treasury or Bitcoin goes up to that figure and, you know, 10% of your stack, you know, has to be sold, but your 90% of your stack triples again, that's great. And if it doesn't, then you have more cash to stack. Or if you're going to buy Bitcoin anyway, and you want to, you know, get paid to stack a little bit more, you can sell puts, right? So if you're selling puts, is essentially a binding limit order, and you get a premium to do that. You get a premium to buy the dip for a future commitment to buy the dip. So there's all these things that I think, while, you know, you traditionally wouldn't think of these as corporate treasury strategies, for a company that's, you know, nascent into its Bitcoin strategy, If you have a strong core business, it may not, some of these things may not be as attractive for you. But from a if you think like from a treasurer perspective, for a company that, like doesn't have a conglomerate cash flowing business like MetaPlanet, these are all things that we said openly in the disclosure that we would evaluate, right? And all of it is aimed in the sense of accreting Bitcoin per share, benefiting shareholders on a Bitcoin per share basis. So, that's kind of how we think about it. It's extremely hard to say, okay, here's what we're going to do in 6 months. We have no idea because it's kind of what the market gives us. But I mean, the long term plan is simple. It's we had a call or not a call, a meeting with a pretty serious institution a couple weeks back, and one of the questions was, so what's the exit plan? What is your price target? It was this institution wasn't kind of a Bitcoin native. It was a recommendation. We had an intro and set up a meeting with them. And so they were familiar vaguely with the story and the corporate playbook concept, but it was more like, okay, so this is a means to an end. What's the end? And we were like, there is no end. Ultimately, if we come to a point where we can deploy the Bitcoin capital and return and get Bitcoin denominated returns, whether that's an acquisition or whatever it may be, we'll look at that. But at this point, we don't see a better place to store our capital and our shareholders' capital. So it's certainly interesting, kind of from speaking about it from the outside to kind of get a glance and see how the sausage is made. But it's been a lot of fun.
It's been a lot of fun to watch, and the creativity with which you're bringing to the strategy at MetaPlanet and others are beginning to deploy, that's a Cathedra as well, I think is an unlock that is going to be massively beneficial. Like taking these facilities that, as you described earlier, were typically defensive mechanisms for companies that had overburdened debt obligations, whatever it may be, and actually turning that into a positive catalyst to increase sats per share and shareholder value overall is one of the most exciting things going on in equities markets around the world right now. And that unlocks too. And if you think about it, it's actually, I would argue, like it's a moral imperative if you truly view yourself as a fiduciary of your shareholder capital and you're stuck between a rock and a hard place of trying to run a business and looking at what's going on in the world of sovereign debt and money printing. Like you have to think creatively, and the fact that you guys have unlocked this creative thinking and are showing the way for others is, I think, going to be massively beneficial for the companies that have boards that are also thinking creatively and actually take action. And at the end of the day, we'll look back 4, 5, 10 years from now, and the companies that thought creatively and access these facilities and leverage them to deploy this strategy, their shareholders are going to be very happy. And their capital is going to be preserved. And that's the most important thing. If you're on the board of a publicly traded company is preserving and growing shareholder capital.
Absolutely. I think, it's interesting, Marty, because, we're in our Bitcoin echo chamber, and we, it's consensus that all of this makes sense, obviously. And, kind of seeing it from the inside, and then going and then talking with, and investors or, IR meetings or whatever, or just taking prospective calls. It's clear that there's, and I've said this in, I think maybe a podcast or two, and I've said this a bunch in person whenever we kind of have this conversation between friends or just catching up. But there's like two spheres of understanding in this corporate strategy, or not two, but there's kind of two main buckets I put people in. There's the people that really, really deeply understand the Bitcoin story, super bullish on it, get the long-term thesis. Even if you just think it's digital gold, you're kind of in that bucket. It's valuable. You own some. And maybe in that bucket as well is like you understand the accretive dilution idea. You understand, you've seen Saylor. You understand MicroStrategy is valuable. You've punted some stock in your 401k or whatever. there's the other side of the kind of spheres of understanding, which is like, I would say, the traditional investor, or maybe like the Wall Street types, right? The classical institutional investor, of which, have had some conversation with. And these are the types that, you could put a convertible bond term sheet in front of them, or you could put a warrant structure in front of them, and they would understand it, and they would understand how to value it. And you would say, okay, well, this warrant is 4 years, and it's 50% out of the money, and the dilution impact will be this, and I plug it into Black-Scholes and I'll value it. And there, that's easy. There's just like, they can whip up a spreadsheet, no problem. They did their years of investment banking at Goldman or whatever. But the overlap of those two, like the Venn diagram of those two circles, is remarkably small. And I don't say that, to kind of sound like, cool, or like, oh, we're in our in-group. It's more so that I kind of naively assumed that it would be a much, much bigger group that was like, oh, yeah, got it. Dilution to stack makes sense. Or like, oh, this warrant structure, it's not a bad thing. It's a good thing. You're bringing in capital to buy more Bitcoin. Like the dilution as an offensive tool and not a defensive tool. All those concepts. It is just like, to double down, it's so radical that I think that despite it being blatantly obvious to our small corner of the internet and the people that we kind of talk to on Twitter and kind of these investor circles, it's not widely understood at all. And I kind of coming into this naively sort of thought that I would come into these meetings and it would be like an instant click, gotcha, from people that are pretty sharp, like high IQ, make a ton of money, super wealthy, have made their career, their living in, investing. And it's many people haven't even heard of like the best performing equity in the world, MicroStrategy. Maybe they vaguely heard about it, but they don't know any of the details. They don't know how it's done. They think, we have a meeting with them. We say, look, we're so far this year, we'll see how it plays out, but we're, the second best performing stock in Tokyo this year out of 4,000 public companies. This is our idea. This is our plan. Volumes have 20x'd. There's obviously a ton of support. Here's our pitch, or here's the playbook. What do you think? And the response is like, it's like an aversion. It's like it's almost like a distaste. It's like, what, that's pretty crazy. And so, for me, it's like, it's honestly it's been an amazing experience, because I realized that, what's kind of internally like this FOMO of like, oh gosh, the world is figuring this out and it's happening all at once. The reality is, the world is figuring it out, but the process is much slower. And there's still a ton of opportunity, right? I think that's the blessing of it, is that if everybody had figured this out and we were, at escape, the event horizon was here, we've approached it already, then that opportunity wouldn't present itself. But the reality is, it's going to take a little bit more time. Things move slow in this sort of rigid corporate governance world. And, the early movers, even 4 years post MSTR, post the Saylor's proclamation and Orange Pill, it's still very early in this story. So that's, I think, for the cathedrals of the world, that, have had a business pivot, realize whether, it's a Bitcoin miner or, a Semler Scientific, realizing that this is the best way that we can store shareholder value for the long term. It's a blessing in disguise, frankly, that it's still this early, and that Bitcoin's still at 60,000, and that the number of companies on BitcoinTreasuries.net is still able to be seen in one page view, right?
Yeah. In your conversations with the bankers who have somewhat of a natural aversion to the strategy, it just reminds me of Jesse Meyer's Yuppie elite archetype. Like, there's definitely a lot of that going on in these rooms, talking with these investment banks are like, this is crazy, and they think it's crazy because like we didn't think of this. Like, there's no way these radical Bitcoiners are getting this creative and utilizing these mechanisms to stack Bitcoin and grow shareholder value. Like, no, there's no way it can be true. It's got to be some sort of grift. But if you run the numbers and you understand, again, if you're in the middle of that Venn diagram, somebody understands Bitcoin and public equity markets, like, I'm pretty confident in saying it is the wisest strategy that you could be running right now. Again, with the backdrop of the sovereign debt crisis that's growing and the money printer that seems like it's going to turn back on globally as we head into 2025.
Yep. And, just a funny point on that is, yesterday I saw on Twitter, someone said, there was a tweet. It was like MetaPlanet 2.0 or whatever. And I was like, huh? And I looked, and, a Japanese corporate had, purchased 1.5 billion of crypto. And I was like, huh? And I read the disclosure, and, some people were excited about the additional adoption, and there was, the firm purchased 1 billion yen of Bitcoin, 200 million of, or I might mess up the numbers, but 200 million of Ethereum, 200 million of Solana, and 100 million of AVAX, Avalanche. And so I think it's interesting. Best of luck to them. But despite, we've attempted to be radically transparent with everything, and scream as from the mountaintops. Obviously Saylor has been doing that to a much bigger funnel or audience for 4 years. But despite all that, I think it's going to take some time. The siren signal of crypto is still going to be pulling people in. And, there's going to be a lot of fiat shenanigans with this, through this until we get to the other side too. So, yeah, it's a fun time though. It's certainly couldn't have predicted a lot of this, but I wouldn't change anything.
No, it's fun. Are you having fun?
Yeah, for sure. It does feel a bit like, I think we'll look back in 20 years, and this is true for a lot of the, the kind of early Bitcoin adoption, but it's a good sign to me that it's still such a faded, never mind the corporate story, right? Just the thesis in general. Right. Like, you had, what's his name? Bill Maher or whatever come out. Yeah. And
the dirty secret about Bitcoin, it's using a lot of energy. It's like, all right.
The dirty secret. Numbers was way wrong, but like, it's still, I saw a poll, and it was, what matters to young male voters? And it was like the economy at 70%, and, blah, 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 blah. And then it was what's the least important thing. And it was cool to see Bitcoin or crypto on the list, because 4 years ago it wouldn't have been. But it was the last thing on their slated list of options, of which I don't know how much there was. But it was like 13% of male voters said crypto, which is an okay number, decent. And like 19% said trans rights. And so, that aside, I think for me, that was just another additional data point of like, okay, this is it's very fringe. There's still a big information asymmetry, and that's all the more bullish for anybody that can kind of comprehend it all and act on it.
Take action, freaks. Shifting gears a little bit, because it's big in the news this week, the options on the Bitcoin ETFs. What does that do for the market?
Yeah, there was I think Jeff, I forget his last name, from Bitwise, had a nice write up on it, talking about all the option Greeks and whatnot. I don't think
Alpha.
Yeah, the Nano Charm, whatever. I am a math guy myself, so I like getting into the weeds on, derivatives and understanding the mechanics of things. But, I think for the big takeaway, or the interesting thing, is that Bitcoin is, the biggest knack on it is like, oh, it's, doesn't produce cash flow, and it's just this intangible thing. It's this pet rock you store in your underneath your bed or in your basement bunker. And while and there's maybe merit to it that cold storage there is merit to it that cold storage Bitcoin trumps all. The reality is, like, this was always the path, and it is going to become financialized in a way. And these big institutional owners will own a big chunk of the supply, and so this option chain rolling out is going to Bitcoin is going to be a core asset held, and it's also going to be a portfolio in all of these pensions, endowments, institutional funds, passive flows as an income generating asset. And how is that possible? And it's because you're going to have covered call ETFs, and you're going to have rebalancing ETFs that sell puts and buy calls, and all of these sort of interesting mechanics, right? Where, like, for instance, MSTR is MicroStrategy. MSTY is unaffiliated. MicroStrategy doesn't have anything to do with it, but there's an ETF issuer called Yield Max, and they have Nvidia and Tesla and Apple and all these different stocks that they hold, and then they hold those shares in an ETF, and they sell calls. And so it obviously doesn't capture the full upside, because it caps your upside by selling a call. But during any sort of chop, during any sort of consolidation or periods where the market goes down, these ETFs, these income strategies greatly outperform the native asset. So it's just sort of transmutes the asset. And obviously, like, the pitch for Bitcoin isn't that it generates income, but for instance, this MSTY ETF, you technically can't annualize these quote unquote dividends, because it's not a fixed coupon like a dividend or a bond. But the dividend yield, quote unquote, per se, on MSTY is like 80 or 100%, right? Because it's so volatile that these call premiums, these right tails that you're selling by selling calls, chopping off that right tail risk, per se, is super valuable. That premium you collect is really valuable. And so, with the options chain rolling out, I think the big takeaway for me, aside from 0-day till expiration options being a new frontier casino outside of perpetual swaps, is that there's going to be a whole bunch of structured products that come alive from this. Particularly from the income generation side, you're going to have buy the dip ETFs that sell calls and do all this stuff. And so I think it'll be interesting. I'm excited to see what comes of it. And I think that, at the top of the market, this cycle, wherever that is, whenever that is, last cycle, the top, was signified by, GBTC premium carry trades and futures basis carry trades and all these yield shops. And I think it's going to be different, and this infrastructure and these institutional investors are much more serious. But nevertheless, we've seen throughout the history of financial markets, in just the last 20 or 30 years, you've seen the NASDAQ bubble, you've seen the real estate bubble, you've seen the everything bubble of 21. I think these ETF options are going to, at first, maybe there's price suppression or there's volatility suppression. And, wherever we peak, there's going to be, the most degenerate form of speculative fervor, in this market. And I don't think that's good or bad. I think that that's just the reality of markets. And, derivatives on a long time frame are net neutral, and, on a shorter time frame are going to, drive a lot of these swings. But, Bitcoin's a super unique asset, right? Like, if you look at every other asset, puts are much more expensive than calls, right? If you want to buy S&P 500 puts 20% below the market versus 20% calls and 20% above, the volatility that's implied for these sort of options on the downside for equities, for stocks, for the S&P index is much more pricey. Puts are more expensive than calls. But that's not the case for Bitcoin. Often, right now, for 3-6 months out, calls have a premium. It's the only asset that can get cut in half by 50% or 60%, no problem. But also it can triple in a year. And so this sort of options, the volatility smile and this sort of like underbelly of the derivative market for Bitcoin options is unlike anything that Wall Street's seen, right? Like when's the last time the VIX has blown out? And the VIX has gone from 20 to 40 in a day, and equities have gone up, right? If you remember in October of 2023, I think it was like when he broke 30K, and then all of a sudden we were at 40K overnight, and it was kind of in the midst of like BlackRock ETF rumors and whatnot. But if you remember that day and you look at some of these volatility indices, BVIV, you can just look it up on TradingView. It's a Volmex implied volatility index. They basically take the VIX, which is the S&P implied volatility index, and they just map the same equation onto the 24/7, 365 Bitcoin market. So it's a 1 month Bitcoin implied vol. And as Bitcoin went from 30 to 40K in this, 24 hours or whatever it was, a massive move after a huge year of just nothing chop, implied volatility exploded in Bitcoin. And like that, again, that does not happen in these legacy markets. So I think you're going to see a lot of shenanigans and whatnot, but at some point, to both, on both sides, but definitely at one point to the upside in a massive way, people that are, quote unquote, shorting volatility are going to be blown out. And so I think it's just interesting to think about. And, a lot of these Wall Street guys, are going to enter an arena that is an open and free market, and it's not something that you can say about equities or bonds for the last couple of decades.
Yeah, I worry for our Wall Street friends. I think a lot of them are going to apply some fiat thinking to these strategies and get completely blown out.
Yep. Yeah, pennies in front of a steamroller, and I think that's what happened last October, right? Is you had someone that was, selling calls, shorting volatility, which is what they do with the VIX, right? There's all these fixed, structured products in the legacy markets that are essentially, through one way or another, you can qualify them as short volatility, right? And so these are, kind of predictable incomes, and they they only lose money, and they lose a lot of money during tail risk events, whether that be tail risk in Wall Street usually means left tail risk. The market pukes, the market goes down 20%, 30%, things blow up. Bitcoin has a right tail that is essentially I would say it's unquantifiable, right? And so that's where it gets very interesting, especially when you kind of bake in the game theory and all of the kind of intangibles that we know and talk about, and the understanding, and these massive pools of capital that are just plugging in, and the corporate strategy, and the state of the fiat markets, right? So how do you model the Bitcoin's distribution? Because with the S&P 500, you can say, well, the index is earning this, and once it gets to a PE of Y, then you shouldn't own it, or you should sell it. And so there's naturally kind of a barrier, and that barrier gets raised every year because of debasement and in theory economic growth. But with Bitcoin, like that, there is no fair value model. There is no DCF model. There's no intrinsic value, and the fundamentals strengthen as the price goes up, in the minds of everybody, and just mechanically with hash rate, the difficulty adjustment, and liquidity, and the whole 9 yards. So when you kind of layer on these derivatives, which in theory tame the market, but actually sort of kind of lead to temporary distortions that often blow up, I think it gets super interesting. So I think the ETF options were always inevitable. I think they tried to drag their feet on it for a while, but it's going to entrench itself. And ultimately, I think my kind of general thesis or mental model is that the deeper Bitcoin entrenches itself into the fiat system, the better. And many maybe an anarchist type, or anti-establishment anarcho Bitcoiner would disagree, and that's fair. That's fair enough. But ultimately, Bitcoin Trojan horses itself to $100 trillion by becoming part of this too big to fail liquidity complex. And that's not true at 500 billion or a trillion, but you get to 5 or 10 trillion, and Bitcoin has a 60% drawdown, and there's issues, right? And so that's where this becomes somewhat of a self-fulfilling prophecy. in terms of, the fiat system and it's kind of a interplay with it. So yeah, I think that, this is just kind of another step in the path, step down the road. That was always inevitable, but it's just kind of another data point that we have that it's happening.
Yeah, it is happening. I mean, I've said this many times since the conference in Nashville. It is crazy just to take a step back and take a retrospective look on how far the industry has come over the last 5 years. Nashville 2024 compared to Bitcoin conference 2019 in San Francisco in a parking garage. I think that's something that a lot of Bitcoiners, I don't want to say they take for granted, but being in the weeds day in and day out, year in and year out, I don't think many people recognize just how far we've come in a relatively short amount of time. And the reason you bring up that retrospective analysis of how far we come is because if you play that forward another 5 years, I don't think even Bitcoiners can fathom just how far the industry will go and how embedded Bitcoin will be in the system and outside of the system as well.
Yep. And it's, I think you couldn't contrast that any further from the state of the crypto complex, right? Which is, I mean, it's constantly undergoing, this kind of,
pivot,
this pivot identity crisis. But, ETH BTC and the, the perpetual L1 competitor or layer 2 scaling solution that also has its own coin kind of thing. Like the fact that there's, sort of uncertainty on the, how these are all classified as quasi securities. Like I've seen it's always interesting to see sort of, especially on the timeline, like the sort of existential questioning of like, so I've been, it's like what, they're talking about some, meme coin pump and dump or whatever. And someone will go, some .eth handle will say, what are we even building anyway? And everybody, either is in agreement or is chanting the, the kind of the talking points. But I never see actually, or very rarely will see someone that's, deep into the Bitcoin world say, well, have we made any progress in 5 years? I've never seen that talking point once, actually, versus, the people championing, the multipolar, multi-coin thesis constantly are questioning, well, what's the point of all this again? Like, we just built the 10th Rube Goldberg casino and, it's just value extraction and people, it's all a joke. Like what are we building here? And I would say, that's a great question. And so, yeah, I think, it's more abundantly clear for the conversations that I have that, although it's not consensus, the Bitcoin maximalist sort of worldview is coming around. And I would say that, the crypto, the multi-coin crypto polarity thesis is as incoherent as it's ever been.
It's in a bad state. We're going to pull up a tweet right now because I was looking at the timeline last night, and this is how lost the crypto complex is. Somebody literally seriously put forth the idea for It's Always Sunny in Philadelphia, Patty's Bucks as a cryptocurrency. Like they didn't say Patty's Bucks explicitly, but I want to open a bar that's members only. You stay crypto as your membership fee. The yield goes to the bar. You drink for free. And you are a member for as long as your stake is above a given threshold. It's like,
yeah, I mean, at that point, why not just create your own bar coin?
Right. That's what they're doing. Yeah. And it's like they still can't connect like double coincidence of once. Like, yes, you can have your bar coin if you want, but your distributor does not give a fuck about that. Like, you need to go buy beer and alcohol for your customers, and they're not going to want your Patty's Pub cut buck. It's like unironically putting the Patty's Pub cash out there. I was like, holy shit. I'm so lost.
I did see that tweet. I mean, to a certain extent, it's almost, I could almost, and I say appreciate generously, but I could almost appreciate the Solana meme coin mania as compared to, the ETH, we're gonna build a world, computer, ultrasound money, like the Solana meme coin shill fest, while, extremely degen and obviously zero sum, negative sum, was at least more, more honest in the sense of like, oh, dude, it's all vaporware. Like, it's just, this is just like the swan song of the fiat, the fiat complex. Like, just, gamble, like just gamble, man. Just spin the slots. Like, what do you have to lose? Versus like, with the ETH wave of 2021, that cycle, it was like, no, this DeFi protocol has earnings, and you can put an earnings yield, and the legacy institutional investors are coming, and we need a token because of reasons. And so, it's almost like it's kind of funny seeing the splintering of consensus there, because, literally and figuratively, because it was always all vapor, right? All the tokenomics and everything else, it's all trending lower, and it's all going to trend to its, marginal production costs, which for basically all of these things is zero. And so, dwindling liquidity, dwindling attention, basically these are all they all have their, if at all, they have their day in the sun, and then it's, kind of a fade into irrelevance. And so, there's obviously a fair amount of people that make it out, and they do their value extraction and go on with life. But, for basically everybody else, it's a net loss. And so I think, for better or worse, a lot of those people find Bitcoin, but unfortunately some of them get scorned. So, and a bit jaded from it all. But yeah, will be interesting to see how it plays out. I think, another, point on the Trump thing is that he's a bit of a wild card. I think everybody knows that. It's always been, you take the good with the bad with him. And he's obviously, the rhetoric for Bitcoin has been astounding and great, but I think we do have to recognize, a Trump administration would essentially, it would be open season for everything under the sun, evidenced by the fact that his proteges are, launching a shitcoin. So for take it for what it's worth. But that's either way, I think that it'll be an interesting timeline.
Agreed. And I agree. I do appreciate the transparency of the Solana meme coin, where it's just like, we're degens. I much prefer that to the virtue signaling LARPing of the Ethereum crew. Will not participate. Don't think it's going to benefit most people in the long run. There will be some that make a lot of money, but most people will lose money. And on that note too, another thing I'm paying attention to this cycle particularly is the liquidity flows into broader crypto, due to the fact that most people entering the market these days are coming through the ETFs. And historically, you've come through Bitcoin on an exchange and then sent it to an altcoin exchange and converted there. And the ETFs don't really create that possibility. And does that create a sort of curbing of the crypto bubble this time around? Don't know.
Yep. I think so.
Yeah.
With the ETF flows for ETH have been, I think, non-existent, maybe even net negative. And so, yeah, it's clear that Bitcoin is, from an institutional framework, is much, it's a much more of a consensus than anything crypto. And that, the mechanics of those rails, like the bleed that, comes from the Bitcoin appreciation into all these altcoins that everybody seems to just be banking on as if it's it's an absolute certainty. I don't think it comes, or, maybe it comes, but in a different flavor. So yeah, I think, that's it's interesting to watch. I don't have any skin in the game with any crypto, thankfully, but yeah, I know a lot of people that are doing some soul searching. So we'll see how it plays out.
Find your souls, freaks. All right, last question. I don't know if you know this, but we've started a new last question segment on the show. What is a bold prediction or idea that you have for the Bitcoin industry that you think most people would disagree with?
Wow, that's a good one. I think, what do I think? Do you ever answer these? Can I cop out and ask you first? Redirect it back?
Yeah, now I've got to think about them. But the bold idea or prediction that I think most people disagree with. I don't know if most people would disagree with this, but I don't think we necessarily need Parker. I know Parker would disagree with this, but I don't think we need like the medium of exchange, like buying things with Bitcoin as quickly as people like to think. It's great. Like, and I'm somebody who uses Bitcoin and spends Bitcoin. When I can buy things with Bitcoin, I do it, but I don't think it's necessary for Bitcoin's long-term success at this point in time.
Yep, that's a great one. I think I agree there for sure. But let me think of my own. I mean, this is vague, but in 2020 I would have said, just worldview had a lot to learn, of course, as I still do today, as everyone does, but. I would have said that, the dollar collapse and, the fiat complex collapse was imminent. And now I think that the dollar can persist. And I have no incentive to say this or whatnot. Someone like a Saylor says this and people are like, oh, he's a spook or, blah, blah, blah. But I think that honestly, the dollar can stay around a lot longer than people believe, even amidst, a large inflation burst. It's sort of almost like a derivative of your response, but even with a massive devaluation of the yen and the euro, I'd say the euro is a little bit different, but the dollar in particular, I think Bitcoin can be $100 trillion, and there people could still $100 trillion or equivalent thereof in value, and people could still be transacting in dollars, and whether globally or not, or whether it's enforced at the point of a gun is another story. But in that sense, I think it's sort of an agreement with your point in that the store of value and the asset case is, and I think it's evidenced like in Japan, where there's. I was talking with a lot of people and they were talking about, we were looking at places that accepted Bitcoin and there were so few. And in Japan, unlike in the US where there's just like 3 or 4, there's like a little card when you go and check out and it's like all the different pay services. And there's like Apple Pay and MasterCard and Visa. And then there's like 20 companies I've never heard of in Japan that are like payment service providers or whatever. And all of them seemingly, I mean, I didn't see all of them, but they're all instantaneous, right? And there's not a tax liability or whatever it may be. So, I would say it's a different case for all the third world currencies. I would say it's a different or developing market. I would say it's a different case for even like the euro, which is attempting to kind of artificially keep this currency block together. And it's this bureaucratic monstrosity. But for something like the dollar, right, I think that, Bitcoin, there's, the kind of the Trump Vance ticket, and the backing of like the Peter Thiel types, their vision of this, and people like Mark Goodwin and the Bitcoin dollar thesis take a more kind of I wouldn't want to say jaded or adversarial view, because I think Mark and Whitney Webb produce amazing research, and I agree with a lot of it. But I think that kind of thesis of Bitcoin as this release valve mechanism to appreciate and to kind of absorb all of the excess monetary premium and currency debasement as the dollar remains this kind of this medium of exchange. That thesis can be directionally correct. And I would say 3-4 years ago, I would have been in large disagreement there. But as for the timeline of when the last dollar is transacted, there's liabilities that go out for 20, 30 years. And so whether we make it that long or not, it's not my place to say. But all that to say, I would be surprised if we're talking in 10 years and the dollar still isn't being issued by Congress. How much that dollar purchases is a different story entirely. But I think that this game can persist for a long time. Despite Bitcoin, appreciating by an order of magnitude, 2 orders of magnitude. And so, yeah, I think that's something I would say that I even maybe would disagree with myself a few years back.
Yeah, that was a good one. I sprung that on you. I got to start sending these questions to the guests before the show, Logan. But thank you for answering on your toes, like you mentioned. Dylan, thank you so much for joining us. It's been too long. We got to do this more often. Like I said, I'm like a proud older Bitcoin statesman watching you do what you've done, particularly this year with MetaPlanet. I think what you're doing is extremely exciting, extremely creative, and it's definitely making waves. People are paying attention, even if it's a small circle of us Bitcoiners who intersect with public markets, and it's going to have a profound impact on the way people operate within public markets. So it's really cool to see you're crushing it, and keep crushing it, dude.
Appreciate it, Marty. It's been an honor to come on. Hat tip to you and the guys at Cathedra as well, on the same team here. Yeah, we'll definitely do this again sometime.
All right. That's all we got today, freaks. Peace and love. Bitkey.